I'm John Marino, Senior Editor of TheDeal.com, joined today by Gino Sabatini, WP Carey's Co-Head of Global Investments and Managing Director. I appreciate you taking out some time today to talk the sale-leaseback process with us. It seems to me like it's a little bit increasing now where private equity firms are trying to make a deal to invest in either a family or regional business. Tell us a little bit about what folks are doing in the middle market arena.
Sure. Well, thank you, and it's nice to be here. Sale-leasebacks have always been commonly used in middle market and privately held firms for many reasons. First and foremost, they don't really have the access to the capital markets that the larger firms do. So sale-leasebacks provide an alternative for them. If they do have balance sheets that have a number of real estate assets on those balance sheets, they use the sale-leaseback to free up the money embedded in the real estate and use it for more productive, higher growth-oriented uses.
So where geographically is attractive right now? What are some of the other factors that are going into this? It kind of seems to me like a middle market firm can kind of make a little bit of a bigger deal through a sale-leaseback.
First of all, WP Carey does deals all over the world. I'll give you a good example of a U.S. deal we're working on right now. It's a $30 million transaction. It's an automotive supplier, and it's a closely held company who's looking to make an acquisition. And they've looked at their balance sheet and they said, we own 3 buildings on, in our portfolio here. We think it makes sense to sell those buildings, use the proceeds to help purchase this new company, and then enter into a long-term lease on those buildings. Real estate's a very long-term asset, and it makes sense to finance it with a long-term piece of financing, and that's what a sale-leaseback really is. We invest all over the world, across the globe. We really look for investments which provide a great return for the risk that we're taking. We look at all different sectors, all different types of industries, and make bets on emerging credits worldwide.
And you had mentioned, I guess, earlier that this was a factory or a warehouse building where you had done your most recent deal. What other kinds of properties really work best for sale-leasebacks? Is there stuff that doesn't, like farmland?
There are certain types of assets that are highly specialized that we would pull away from. We do want to have some sort of downside protection. If in fact the tenant doesn't make it, we'd like to have a piece of real estate that's somewhat fungible, and maybe we can go out and re-tenant it and find a different user if our credit doesn't make it. But we've done all types of real estate, and it's really a balance of the credit and the riskiness of the real estate. If we have a terrific credit, an investment grade credit, for example, we would take a lot more risk on the real estate. We might purchase a very specialized manufacturing asset that would have limited use to another tenant. On the other hand, if we have a very small company, we would really rather a building which is more easily re-tenanted. For instance, an office building or a distribution center well located in a nice metro area. So it really depends on the type of company we're dealing with, but that's the basic analysis.
It kind of seems to me like in the real estate space, things have really heated up over the course of 2013. A lot more private equity firms getting into the space. Do you kind of get the sense that the space is getting a little bit crowded, or is that not really the area that you guys are playing in?
Low interest rates have certainly driven tons of activity in the space. Rates have begun to move, and it's rebalancing things quite a bit. We see some money pulling back. We'll see what the future holds. We've succeeded in all types of interest rates environments. We've been around for 40 years. So we're really quite a long-term player, and again, we look at the risk we're taking for a particular transaction and balance it with the reward that we're being given, and make a decision.
Gino Sabatini, thank you very much for joining us today at TheDeal.com.
Nice to be here.
I'm John Marino for TheDeal.com.